Welcome, Patrick, to the Talk Shop podcast. Patrick is the Director of Business Development at APMEX and One Gold. They trade precious silver, metals, gold, all that cool stuff, which I know absolutely nothing about, and that's why I wanted to have you on. I wanted to teach the people listening and myself about this, so I figured what better than having you on the podcast. Patrick, welcome. Please introduce yourself, what your company does.
Great. Thanks for having me on. As you mentioned, I'm the Director of Business Development at APMEX and One Gold. APMEX is one of the largest online retailers of precious metals. We've been in business for about 20 years. We've sold over 15 billion, so that's with a B, in lifetime sales. We estimate that we have about a 30 to 40% share in the US market. I personally have been with the company for over 11 years now. I've held various roles in merchandising, sales, project management, marketplaces, and business development. Most recently, I began running One Gold, which is an online investment platform which allows customers to own a vaulted position of gold, silver, and platinum. And One Gold has done over 750 million in transactions in its first 3 years of business. I've also been involved in launching the first ever precious metals rewards credit card, which is called the Bullion Card.
Okay, cool. So just for clarification purposes, like APMEX is trading coins, all that stuff. It's like a mix of everything. And then One Gold looks like a startup. When I looked up both the companies, One Gold looked like you said, Robinhood, right? And the other one looks like an old-fashioned trading platform for coins and things like that. Is that what they are?
Correct. So APMEX is the parent company. As I mentioned, we've been in business for over 20 years. I almost consider it like the Amazon of precious metals. So we have over 25,000 products in stock, ready to ship. You find out what you like, whether it's a gold American Eagle, a Canadian Maple Leaf, or some collectibles. We also have like Peanuts coins, Star Wars coins. You decide what you want, you add it to your cart, and then we'll ship it to you for delivery. So basically like a traditional e-commerce site. And then One Gold is a newly formed company, started in the last 3.5 years. It's basically an online investment platform. So I consider it similar to like a Robinhood or a Coinbase for precious metals. So you could own a vaulted position in gold, silver, or platinum. If you decide that, hey, that's not for you and you actually want the physical coins, we also offer a redemption option where you could actually swap your position at One Gold for physical coins for delivery.
Do people ever get like gold bars, gold bricks from APMEX?
Yeah, we have quite a few large customers. I think our largest customer has spent, I would say, close to $100 million
Oh
with
my
us.
God.
Which is interesting. I mean, it gets into another point too. Is you have a lot of deep pocketed people, and that's where we came up with a solution for One Gold too. Because if you're fortunate enough, let's say you invest a 6 or 7 figure sum into precious metals. The nice part about physical is obviously it's in your hand. You can't hack it away and so on. The downside is you have to worry about securing it. And if you don't even need 100 million. You could have 100,000. Some people don't feel comfortable holding 100,000 in their house or their apartment or wherever they live. So that's why we created a solution like One Gold. So
I
you
see.
basically have direct ownership of it without actually having to worry about having $100,000 in gold. And you're like, well, I'm going on vacation next week. How do I secure this thing?
I see. I'm a real estate guy. I know nothing about gold and silver and all that stuff, but I've heard my whole life from the old fashioned people. Gold, silver, that's where you place your money. You buy these coins, you put it on the side. I've never been a big believer in that. That's why I wanted you here. I wanted you to convince me otherwise. And when you're convincing me otherwise, it's everybody else listening as well. But why, like, what's it look like trading gold and silver outside of One Gold? If I buy a golden brick right now and the economy tanks, who's buying that golden brick from me? Where's the value stored? In the gold?
Yeah, so it's just like any commodity. It's like oil, it's like wheat, it's like cotton or whatever. It has a commodity value, basically tied to the futures market. There's always a demand for it. There's a demand for gold worldwide. APMEX would buy and sell any product. Like, so let's say you bought an ounce of gold right now. I think gold's trading for about $1,700 an ounce. If you bought an ounce of gold from us, and let's say a year later you said, "Hey, I want to sell it," we'll gladly buy it back for the current market value. Obviously, if gold goes up, it's
Okay.
$2,000. We'll buy it for 2,000. If it goes down and it's 1,000, we'll buy it for 1,000.
So we could just trade it within APMEX or basically One Gold.
You could trade it within AppX. There's also a global market. There's actually, it was years ago. I was in, where was I? I was in Belgium, in Brussels. And then I was just looking at a currency exchange place. I needed a couple more euros. So I was looking to trade some dollars. And I actually saw a thing where it said, gold eagle, gold Krugerrand, gold maple leaf, and it actually had a price in euros. For basically, if I had those gold coins, they would buy it and give me euros. But to
Wow.
me, gold is almost like, it's like a currency, but without the oversight of a government. So it's like US dollars, it's like euros, but unlike the US dollar, unlike euros, where you have a central bank that could print it into basically infinity, gold, there you have demand worldwide, but you can't easily manipulate it. You can't just create gold out of nothing.
I see. And now somebody like that whale you talked about that traded $100 million through AppMex, is that guy diversifying his portfolio? Is that like a trader?
Everyone has their own ways to get into gold. I personally recommend using gold as a diversification, but some people believe that fiat currencies are going to collapse, which is, I mean, it's their own opinion too. So they go heavy into gold. Maybe they're 80-90% into gold. I can't say for certain exactly how much assets this guy has, but I know he was a big believer in precious metals.
He's a monster, $100 million in gold. So now tell me, I've also been hearing a lot about silver lately, like it's trading at all-time lows or something along those lines. Fill me in. I know nothing. Keep in mind, it's just something I've heard.
Yeah, so silver goes in cycles. It's been as high as $50 in 1980, and then $50 in 2011. Right now, it's currently trading for, I think, around $19. So if you look at it, people say, well, yeah, it's low. Maybe it'll, is it a good buy? I look at it too, and like anything, I look at the risk versus the reward. So back in 2020, during COVID times, we all had that COVID crash. I'm sure you guys remembered, everything crashed, short-term stocks,
Of
precious
course.
metals, and so on. Silver briefly touched $12, and then it rebounded sharply from there. It's been as high as $30 in the last, let's say, year or two. Now, like I said, back at 19. I look at it in terms of like the risk and reward. It's been as high as 50. So you potentially have $30 on the upside. It hit 12, but it rebounded sharply from there. So I think 12 may be a little too cheap. What's your downside? Maybe $7. What's your upside? 30 plus. I personally think silver is a good buy here.
Right. So you're suggesting silver as the buy right now.
I think both gold and silver have different reasons. We could talk about inflation and what gold has done in the past, and then maybe we could go from there to see whether people should own gold or not.
Fill me in. You tell me, you're the pro. And I want you to build on one gold. Can you buy fractions of gold and
Yeah,
silver?
let me start by answering the one gold question first, then I'll get back to inflation. So with one gold, the nice part about it, since it's a vaulted solution, you could buy in increments of 0.001 ounces of gold and silver and platinum. So like
Okay.
you could start with a couple dollars, unlike if you bought a physical bar. Like I said, an ounce of gold's trading for about $1,700. Let's say you didn't want to put $1,700 in. You said, I want to put $500 in. You could do that in one gold. Unfortunately, it's much harder with a physical product.
Okay.
But let me get to inflation too. So I think one of the big topics right now in the market is inflation. So the latest inflation statistics are inflation is running at 8.3%, which is basically a 40 plus year high. So let's look back. So unfortunately, we have to go back prior to 1980 to see what happened in inflationary cycles. So in the 1960s, we actually had an inflationary cycle, and it took the Fed 9 years to resolve that. And in the 1970s, we had a similar inflationary cycle, and it took the Fed 5 years to resolve that. So you look right now, we're currently about 2 years into the inflationary cycle. Just last year in 2021, in January, inflation was only 1.4%. Hard to believe, but basically there was no inflation last year. So what does this mean? So if let's say you held US dollars. You held US dollars and inflation last 5 years like it did in the 1970s. An 8.3% inflation rate is going to erode about 35% of that dollar's purchasing power. And then if inflation lasts 9 years like it did in the 1960s, inflation is going to erode about 55% of your US dollar values. So my next question is, okay, well, clearly you don't want to hold US dollars in inflation. That's probably one of the worst things you could do right now. So with a lot of times people ask, well, what do they get into? Could they hold stocks? Could they hold the S&P 500 index? Or should they do precious metals? So let's look back at those times too. So in the 1960s, the S&P was actually flat during that 9 year inflationary cycle. Or actually, sorry, it was down. It was down about 20% over that 9 year inflationary cycle. And in the 1970s, it was actually flat. And keep in mind, inflation was running double digits. I believe it was about 12% in the
Wow.
1960s and about 14% in the 1970s. So clearly you don't want to be investing in something that's flat or down during a high inflationary cycle. So let's look at gold then. If you look at the 1960s, gold actually went up and made a five-fold move. So it went up from 35 to 200. And then in the 1970s, gold had a similar move from 100 to 800. So an 8x move. So I look at it, if history repeats, stocks are likely going to be flat to slightly down, and gold is likely to make a significant move upwards.
Okay. And what about silver?
Silver is interesting because a lot of times it tends to typically lag gold in the beginning part, but during that final year of the bull run, it outperforms gold. So like if you look at it, I don't know the statistics off the top of my head, but there was a time when gold doubled, I think in the 1970s, and silver was only up like 30%. And then at that point, you're like, well, I should have just got into gold and not silver. But then during that last final year of the bull run, I think gold was up by, I think about 4 times or so, 4 or 5 times from the low. And then silver was up like 12 times from the low. So during that last year of the bull run, silver outperformed gold. I almost look at silver as like the higher beta stock to gold. So if gold goes up 1%, silver may go up 2%. If gold goes down 1%, silver may go down 2%. So a lot of times people look at it, they say, well, if I'm a believer in gold and I want that upside, maybe I buy some silver.
Ah, interesting. And now, back then, there was no cryptocurrency, Bitcoin, Ethereum, any of that stuff. So how did that impact everything you're talking about now?
Yeah, I get asked a lot of times, is it gold or is it Bitcoin or cryptos? I look at it and I say they're different. Each one has a different functionality in your portfolio. You look at gold, gold's had a 6,000 plus year history. It's likely to remain around for thousands of more years. So that's gold. If I look at Bitcoin, Bitcoin's one of the oldest, I think it's the oldest cryptocurrency. It's been around since 2009. The downside about Bitcoin is you don't know what's going to happen with it in a recessionary or inflationary times. Just there's no data. It just hasn't been around there. So I look at it too, like I mentioned before, you look at your risk and your reward. You look at gold, maybe it does a 5x move and repeats history in the next couple of years. Bitcoin could go to, I believe it's just under 20,000 right now. It could go to 100,000. Maybe it goes to 1,000,000, but it could also go to zero. I mean, no one knows. It only has a couple of years of history. What is it? Let's say 13 years of history. So I think you take that in mind. You look at it, obviously you don't want to put 100% of your money into Bitcoin because, if it goes 100,000, great, you made a wise investment decision. If it goes to zero, not really the best outcome. So I would say, given that, you weigh your risks, you weigh your rewards on Bitcoin. Same thing with gold, and put what you feel is a reasonable allocation.
Do you have any Bitcoin?
I used to. I actually sold around 60 some thousand using technical analysis, so I don't hold any right now.
What about gold and silver?
I do own gold and silver. I believe it's more of a long-term savings. I'm looking to accumulate now because, as we mentioned, silver seems pretty low. I think gold is pretty low, so I'm looking to buy.
So what amount of your portfolio is in precious metals?
That's a great question. And I would say obviously depends on everyone's situation. So obviously, if you're young, then maybe you do something different. If you're
No. What about yours? Yours, not anybody else's. I want to know Patrick Yip's.
how about I tell you what history shows, and then you could go from there. And I'll say I'll say I am slightly heavier than what history should indicate.
Okay, go for it.
So I think a lot of times when people look at portfolio allocation, they decide between stocks and bonds. So typically they say if you want a heavier or a higher return, you go heavier stocks. You want a more conservative, less volatility, you go heavier bonds. So we did an analysis looking at the past 50 years of data and looking at 10-year average returns. So this is what this is. It's going to normalize some of the volatility. So it's not going to penalize stocks in 2008 during that crash. It's not going to reward gold in 2011 when it rallied to 1900. What it's going to do is it's going to look at 10-year periods, 10-year investment horizons, and average those returns. But it's actually possible to have almost the return of 100% stock portfolio with less volatility than 100% bond portfolio using gold. So the numbers here are basically in the past 50 years, looking at the 10-year average returns, as I said. Stocks have a real return of 7%. and a standard deviation of 5%. So the standard deviation is basically your volatility, or what I say, how well you could sleep at night. A lower number is better than a higher number. And then bonds, on the other hand, instead of the 7% return on stocks, has a 5% return. So lower return. So, but you also get lower risk. So you have a 3% standard deviation as opposed to the 5 in stocks. If you did a 20% gold portfolio, 80% S&P portfolio, so you got rid of the bonds entirely, you could actually have a 6.7% return. So 30 basis points or 0.3% less than that 100% stock portfolio, but your volatility is now 2.7%. So basically much lower than your bond portfolio. So that's what history shows. As I mentioned, everyone's situation is different. I can say that I do hold more than 20% of my assets in gold.
All right, there we go. That's what we were waiting. That's what we were waiting for. What about real estate? You got anything in the real estate game?
I do not, other than my own personal residence. I honestly think that real estate might be in for a correction in the next couple of years, but time will tell, right?
Yeah, I'm a real estate guy, so 99% of my portfolio is in real estate, and it's rental driven, so I'm not super concerned about where the values go. Actually, it's only going to benefit my company because we're going to buy more. But I have nothing in gold and silver yet, and that's why I wanted to have this conversation. So you're suggesting 20% of your portfolio should be in gold and silver?
This is just looking at like I guess your stocks and bonds and precious metals. Obviously, real estate is a different thing. I think cash flowing real estate is great because it almost eliminates that volatility. If the stock market crashes, the stock market corrects or goes up, it's as long as your tenants are still there, as long as the property is still cash flowing, it doesn't matter really.
I agree. I literally live and breathe by that. But yeah. All right, cool. So hey, Patrick, this was awesome, man. I feel like I got a free financial advisor to come on the podcast, even though you're not, and talk about something that I've never spoken to anybody else about. I'm really happy about it. I'm going to sign up to One Gold. So you just got to plug in right there on my social media channels. I'm going to sign up to One Gold, and I'm going to trade a little bit. Before we sign off, I want to know about the fees. What does that look like? Where's One Gold making money?
Yeah, so I would definitely recommend checking out One Gold. That's onegold.com. What One Gold does is it's essentially a platform where we sourced wholesale bars, so 400-ounce gold bars, 1,000-ounce silver bars. These are the bars that you typically see in movies. Obviously, most of them are not real in movies, but what you can imagine, these big, large bars in movies. We source those bars. We put it in a secured vault, such as a Brinks or a Loomis. Across the world, you get to choose whether you want your gold in the U.S., Canada, Switzerland, or the U.K. The metal that we source is then put on the One Gold platform and then made available for customers like you to buy. When you buy it, you do have direct ownership, direct title of the metal, so it doesn't appear on One Gold's balance sheet. It is insured by Lloyd's of London. It's audited by a top 5 accounting firm. But what we do is we charge a small premium to buy the metal. So we charge 80 basis points, so 0.8% to buy gold and 2% to buy silver. And the reason for this is, unfortunately, we can't get the metal directly at its spot price or its commodity value. So we have to pay a premium for the miners or refineries to make these large bars, and then we then sell that to the customer. So that, like I mentioned, 80 basis points for gold, 2% for silver. After you purchase the metal, you would store it in a secured vault, and from there we charge 12 basis points, so 0.12% to store and insure your gold, and 30 basis points or 0.3% to insure your silver. And if you want to see, you could log on our website. We do have a vault audit page where we list actually all the bar numbers, the purities, where they're stored, and so on like that. So you could actually,
And I could trade it quickly, like if I
yeah,
wanted to be in and out.
you could get in and out as quickly as you want. You could buy right now and sell a second later. So it's almost like it's like a Robinhood or a Coinbase, but for precious metals. So you could buy.
So just to clarify, if I buy $10,000 in silver right now, you're charging me 2.3%, 2% to buy it, 0.3% to store it.
2% to buy it is a one-time cost, and then the 30 basis points is an annual storage fee, and that's storage and insurance.
So I'm looking at, all right, cool, couple $100 to buy it, $30 a year to store it and insure it.
Yeah, to me, it's almost like a mutual fund where you do have a, I guess you do have a cost to buy it. Obviously, that's your bid ask spread, and then you have a management fee. Obviously, the mutual funds, depending on what it is, it could be 1%, 2%, but you do have a fee to basically manage this asset. In our case, the fee is to insure it and audit it and store it.
Do you draw against the value of the silver, or are you charging me to my bank account?
You actually could pay in several different ways. So we accept bank direct debit. So you could link it through and pay by an ACH. You could pay by bank wire. You could pay by a check. You could link your credit card. You could do whatever you want. I would say if you do link your credit card, there is a small fee because we have to cover the processing fee from the merchant.
Got it. All right, cool. Well, Patrick, thank you for coming on the show. This was awesome.
Yeah, one last thing, if I can, I would say definitely check out One Gold. We do have a special. We have a coupon, so if you do want to get started, it's 50% off the gold premiums. That coupon is Gold 50 off. That's GOLD 50 OFF, and then Silver 50 off is the equivalent for silver. So that's the discount off 50% off the premiums of U.S. gold and U.S. silver. Just get started, try it out. I would say get an allocation towards gold and silver.
Awesome. You're the man. Thank you.